I am joined by Bob Lang, a contributor at TheStreet Pro. Bob, thanks so much for joining me here at the desk.
It's great to be with you, Caroline.
So I want to get your market views, market up against some trade developments right now, 25% tariff on Japanese goods, Korean goods. The July deadline is now August 1st.
Yeah.
Some near-term pressure, but overall the market's been doing a good job of shrugging off a lot of the trade uncertainty. How big of a risk are tariffs right now?
Well, I think if you go back to April 2nd, Liberation Day, Caroline, and you realize that the market has been reacting like with a snap on every news piece that's been coming out, whether it's new tariffs coming out, whether it's a push out for 30 days or 90 days or whatever the case may be. And the markets have been responding to that news in kind, either positively or negatively. And as that has been happening, we've seen the volatility index dropping sharply each and every day. And it's right back to where it was, Caroline, back in late part of March. And as you recall, back on Liberation Day, the volatility index rose all the way up to 60%, which is actually on record, third highest it's been since it's been around. So you go back to 2009 when it was hit about 90%, and then actually if you go back to COVID, it was actually a bit higher than that, about 92%. So these were some pretty elevated levels. And when we see volatility rising like that, we see market players starting to sell that volatility. What they're doing is basically selling the news and saying that, the news, every time it hits, is not quite as violent as it was the first time around. Let's call it like an earthquake with a whole bunch of aftershocks right after it. But I think going forward right now, I think what's dangerous right now is that volatility has come down so far that people have become very complacent about news. And we really don't know exactly how trade policy is going to work out. We've seen news coming out every single day, new stuff coming out, deadlines being extended, that sort of thing. But we really don't know how things are going to unfold over a long period of time, and that has me a little bit worried.
So a VIX at 18 means that investors are too calm right now, would you say?
Well, yeah. The rule of 16 here says that the volatility index is telling you that the market says the is going to be rising at about 1% over the next 30 days. That's not very much, right? But we have a lot of volatility in between. Could go up a lot, could go down a lot. But the market is telling you that the fear is just not there about something happening. And really, frankly, we all know tariffs are going to hit eventually at some point in time. But is it going to hit in a way that is going to be destructive to earnings? And that's really the question that investors have right now.
We'll get into the charts because I know you look at the technicals, but when you think about the fundamental picture, do you think it's easier to find cracks in the rally or to find reasons of strength?
Well, certainly the last 6 weeks or so, Caroline, we've seen the markets rally sharply up to new all-time highs. And frankly, great months of May and June back to back tells us that there's a lot of momentum coming into the markets into the summertime, and July being one of the best months of the year performance-wise for the bulls, it's a great setup for more upside going forward. However, I would tell you that moving into all-time highs before we've had any results there is also a great setup for a sell the news sort of event. What does that mean? Basically selling the news after companies come out with some good earnings and stocks have run up 50-70%. Look at names like Meta and Microsoft, a couple of names that we hold in the Street Pro portfolio. These names have gone up quite significantly over the last 6 weeks, and certainly who could blame an investor for wanting to take some profits after the earnings come out?
So as you think about earnings season, which is approaching, do you think that will ultimately be a positive or negative catalyst for the market? Or could it be the sell the news event that you're talking about?
Well, I certainly think that the sell the news event is quite possible and probable it's going to be happening. But what we've been experiencing over the past 2.5 months is the dip buyers stepping in. So, every time the markets come down or any stock comes down, we've seen dip buyers stepping in there and picking up the pieces when scared or nervous investors sell their stocks. So I think that opportunity is right there for dip buyers to step in there and buy some stocks if they do get shot down after earnings.
So talk to us about the levels that you're watching, and if we do see that dip, How big of a dip are we talking about to be able to get in?
Well, obviously, round number 6,000 is a good number to take a look at for the S&P 500. NASDAQ about 22,000, and that would roughly be about maybe about 1.5% down lower from where we're at right now. Even further support down to about 5,800, which probably would be about 3%, 3.5% down. Would feel really painful if it happened, but still the uptrend would still be intact even if we came down to those levels.
So ultimately, even though you might be expecting a pullback here or there, it sounds like you're ultimately pretty bullish on this market. You think that any dip would be a buying opportunity?
Yeah, absolutely. And I think that the market is not giving you any excuses right here to be bearish right now. And I think as the opposite of bearish is bullish, you have to take one side or the other at this point in time. And I think being bullish when the market has a lot of momentum, making higher highs, higher lows, which is our textbook definition of an uptrend, you've got to go with that and go with the momentum until it's not there anymore.
What would make you change your mind about that?
Well, certainly some news that would shock the markets. I mean, I think that news that we had on April 2nd, which was Liberation Day, was certainly shocking, and the markets came down quite significantly and followed through to the downside. So that a big reversal like that, something like that happening, if the Fed took some crazy pills and started raising our interest rates, I don't see that happening. I know probability of that is very, very low, if not if zero. But who knows what could happen, right? If inflation doesn't go away, we see job market continues to stay strong, but the economy starts to slow down, and it's all of a sudden people are starting to talk about the S word, which is stagflation again. So a lot of different things, different variables are out there in place, but for the most part, I think the market structure is pretty strong, and I think we have some upside here into the end of 2025.
Okay. What could traders or investors do, though, to maybe protect their portfolios for those downturns that we could potentially see?
Huge option trader, Caroline, and I love to buy puts. I love to put options are great, and especially right now when volatility is so low. And let's remember something. When the VIX is down, it means it's pricing options very cheaply right now. It did not just call options, but put options. So it tells you that buying a put option is cheap insurance just in case something happens and the markets happen to go down, to have to drift down. I mean, we can't go up every single day. And I think the markets were up towards the end of June into the beginning of July, about 6 or 7 days in a row. That streak can't continue, right? And so it's all, you need to have some protection on the downside, just in case sellers decide to hit that sell button.
Okay, we'll leave it there. Bob, thanks so much for joining us. Really appreciate your insights.
Great to be with you, Caroline.